Hello, welcome to my weekly review. Happy Thanksgiving a little early here. As my disclaimer, I'll just say these are not by hold or sell recommendations. This is just for my amusement only, and all you little boys and girls got to do your due diligence and be responsible out there as the Fed tries to jawbone this market down. You're looking at a daily chart of the Dow Jones Industrial Average, and it's been closing above its 21 EMA since the middle of October. And it ripped right through, had a little trouble with its 200, little resistance, but once it's been through, it's been strong. Came down to its 10 EMA on Thursday when Bullard jawboned the market down with his 7%, Fed funds terminal rate. And if we're talking inverted yield curves and Fed funds terminal rates, we're doing it wrong, folks. Let's just talk stocks, price, volume, and the Russell is trying to join the Dow Jones Industrial Average. The Dow needs a playing partner here, and the Russell was rejected here, but the small cap index showed resilience on Friday, and it's right at its 200. So I'm looking for this one to show some strength, and this is typically a pretty strong time for the market here, and the midterm elections are over. And this time of year is usually pretty strong, but we'll see. Didn't happen for us last year. The S&P has been above the closed above its 21 EMA since that weak CPI number that come in better than expected or lower than expected or whatever. And it's been trading above, it's closed above its 21 EMA for 7 days there, as you can see, but still below the 200, which is this black line. The Nasdaq is the weak index. It's got all those heavyweight mega cap tech stocks that just are trying to trim the fat here with all their layoffs, but here's the Nasdaq with 7% gain that day, and it's closed above its 21 for 7 days as well. It's above the 50, but it needs to get above the 21 here, this downtrending 21. I mentioned those mega cap tech stocks, and Meta was the poster stock for this thing going down. It's like a big waterfall, but it stopped going down. It traded down to what, 88 or something, and now it's up to 112 here on Friday. A couple of others, that are these mega cap tech stocks. NVIDIA stopped going down. It was up 4 weeks in a row here before pulling back last week after its pretty poor earnings last week. AMD's been up 5 weeks in a row, still 55% off of its high. But Google, they stopped going down here. It made a low on this week, and since that CPI number, this thing has been higher as well. You can see it came down pretty far here, 83. And now it's trading at 97. So Google, Microsoft, all those mega cap tech stocks have kind of stopped going down. They've been announcing a lot of layoffs, and I don't want to talk about them. I want to talk about for solar here, making new highs consistently. I'll go to the daily chart, and you could see, day after day, pretty much this thing just trending along with its 10 EMA. Every time it pulls back, it finds support there. So what's not to like? We like new highs. InPhase, another popular solar stock. It's forming a base, needs to take out the 324 and make new highs here. This is SHLS. They gapped up on earnings, and it was what, 20, I believe it was 23.8% above its 10 EMA on Thursday. So it had to pull back on Friday, and had a little pullback, but it's still 16.8% above its 10 EMA. So that's a hot stock. I want to go to the biotechs though, because the biotechs, if we have a new bull market, the biotechs could certainly be leaders. You never know when these things are going to pop with new drugs, and you can certainly make money in the biotech sector. I have in the past, just owning stocks that come out with new drugs. Catalyst, they had litigation settled here, ran up, and now it's forming a base, and it looks real good here, setting up in this base. Vertex is another one. It's had a really strong year in 2022, while the market has had a terrible year. A lot of people have been hurt this year. This thing broke a downtrend line on Friday after this little pinch here, a little pinch and pop pattern. Very nice. Vertex. PCVX is another one. gapped higher on a trial news of a positive trial, and then it's been holding its gains. Pulled back on Thursday with the Bullard comments, 7% rates. Yeah, sure. So that one looks strong. Gilead, I mean, these, they can present these without comment. I mean, gapped higher in earnings, holding its gains. Biogen, same thing, gapped higher, holding its gains above the 10 EMA. I mean, you got to love stuff like this. Immunocore is another one, had a nice little consolidation here, and now it's trending higher above its 10 EMA. And FDMT, for all the high tide flag folks, this one went from, I think, $8 to 24 in like 7 days. And there it is, 857 on November 10th. And the 17th, it's a 24. So that's definitely one to keep an eye on when you see, stocks making highs with higher volume here. Pay attention to that. I'm going to move on and go to some retail because we got a lot of retail reports last week. Here's Ross Stores, closed near the low of the day, but certainly had a nice day, gapped higher. Definitely one to watch. Foot Locker's another one that reported, had a nice gap here, still within a base. They have new leadership. You got to pay attention to new leadership because they can change things and turn around the companies. This is Elf Beauty. This one, not much to say here, right? I mean, broke out of this base and is trending higher and respecting its 10 EMA. And on Friday, 7.4% above its 10 EMA. So that's a really strong stock. CROX, I don't know what this stock does, but it formed a stage 1 base after this, year-long sell-off, a little consolidation, and now it's starting to act better. It's got 43, 51, 57% sales growth. So I guess the institutions like the accelerating sales growth. You can see the big blue volume bars here. This one is also, 9.7 above its 10 EMA. So maybe it'll just handle out here around the 100. That's a nice little gap and go, and maybe another base there around 100. We'll see. Maybe it'll just go to 120. Who knows? Stay tuned. Wingstop is another one, gapped up on earnings. Their restaurant stocks have been doing well, and respecting its 10 EMA there. So I like Wingstop. Who doesn't like Wingstop? Come on. And then this is QSR, Popeyes. They have new management as well. So you got to pay attention to that. You see this big base on base pattern, and now it's broken out. So QSR looks good to me. Okay, let's move on from retail and go to some of this fiber. We all need our fiber in our diet, right? And the fiber stocks have been doing well. This is CALX, CALX, a computer networking company. The whole group is really strong. It's 7 out of 197. And this one's respecting its moving averages after this long little, let's see what this looks like on the weekly. Yeah, nice little base. Look at this, trade sideways for a long time, then gapped higher in earnings, and it's holding its gains. I've seen stronger stocks, but it's doing well. EXTR, got some buddies who work here. This thing's been tearing it up and broke out. Now it's respecting its 10 EMA. Very nice. DGII, another one doing well, respecting its moving averages. I'm going to move on from the networking and go to the semis because I know a lot of you like the semis. There's a lot of different areas of semiconductors, manufacturing, equipment, and chips, and fabless stocks. But anyway, this is on semiconductor, and they're on semis into the EV part. So they're in a nice little space here, and you can see the consolidation. It got a little ahead of itself here with this move from its low of the range to the high of the range, and now it just kind of pulled back. So there's a move on Thursday when Bullard once again talked these stocks down, and this one found support at its 21 EMA. So that's what you look for in weekdays. Where are they going to find support? And this one found support at the 21. This is Global Foundries, manufacturing stock. This one has formed a nice little base here. It's within the range. Let's see it handle out here around that 65, 67 level. And maybe we can get a breakout here pretty soon, or just, watch this thing grind higher. PI, this is not it's pretty thin stock, but it gapped up on earnings, holding its gains. Right there, again, on Thursday, found support at the 21. AMKR, This is, I believe they're based in Phoenix. Anyway, doesn't matter. This thing's gapped higher, holding its gains, a little extended here, 9.2% above its 10 EMA. But if you look at the weekly, you can see it's just in this consolidation period. Hey, we got the blue dot here on the weekly. Yay. Anyway, a couple other random stocks that I want to look at. Here's SMCI. This is really strong. You could just take a look at the numbers here. Then, you know, it's got what, 7 billion in sales, and it's got a 4.5 billion market cap. So this one broke out. It's an inexpensive stock if it continues to, you know, show this type of growth here. But it's respecting its 10 EMA. Another one that I want to look at is Sanmina. This one is they gapped up on earnings. The Solar Brothers, they know what time it is. It came down to its 10 EMA and found support. Still a little extended here. You know, it's only 2.5% above the 10 as it pulled back there and found support on those hawkish comments on Thursday. They have a share buyback program, and Yuri's going to use it because he thinks his stock is undervalued. Anyway, I think I'm going to stop there. I could go through a ton more stocks, but I'm not going to. I'm just going to wish everybody a happy Thanksgiving. Thank you for watching. And at mcstockcharts.com, we never give up, so you better not.